Hello everybody and welcome to the Cyclical Investors Club YouTube channel. This is going to be a little bit of a channel update and also a check-in on the performance of some of my buy ideas here on the YouTube channel. I'm going to try to do this about once every quarter. I think I've done a decent job of doing that, just touching in every now and then on the stocks that I suggest or buys on the channel. I'm pretty big on being accountable to any stock suggestions that I have. Now, I only write buy articles or put up buy videos, or in my full service Cyclical Investors Club, I only have stocks that are buys that I actually buy myself. That usually leads to me being a little more conservative and having fewer kind of promotional buying type suggestions than than most other analysts who don't have skin in the game. So I like to review these every now and then. I don't keep track anymore of like my sell recommendations or suggestions because I take so many requests that I'm not really picking and choosing the stocks that I think are the most overvalued or the riskiest. So I kind of take whatever folks are giving me, and I don't always remember exactly what each analysis is. So I don't always label each one as a sell. Now, back in 2021, when I first launched the channel for a few months there, I would have pretty clear buys, sells, and avoids. And so I did track the results of those for a while. And I have a couple of the buys still left here that I still own. But for the most part, I'm not keeping track of any sell videos anymore. I could do that if anybody is really interested and wants to know. And article-wise, when I write articles, I can still look at that data. But at any rate, so we have. I'm keeping the ones in here from 2021. I had one kind of outlier with Cigna where I kind of popped in and made a video in 2022, even though I didn't really make very many. And then I relaunched this channel in October of 2023. So that's where we're going to see the more recent ones. So the ones we see here, the stocks we see here, these are ones that I still own. There is another group that I've taken profits in or sold since then. And these are just still calculated. This isn't when I sold them. This is just where they are since I made the initial videos. All these are from back in 2021. Comcast is a more recent sell. I don't think I took a loss quite that big on it, but definitely was a loss. The rest of these, pretty big winners. So I did pretty good on all those. Those aren't going to be calculated into the ones that I'm looking at right now. But I did want people to know that they exist. So this isn't and then obviously I own and buy a lot more stocks that aren't on this list. These are just videos, and these are just from the dates of the release of the videos. The one slight exception is First Solar, which I put out a video that I had originally made for free tier CIC members and Patreon members. And I just kind of put out the same video that I had originally put out, like maybe a few weeks earlier. The buy price for First Solar in that video was $220. I think at the time the video came out on Independence Day, which is a holiday in the U.S., July 4th, and the price was a little bit higher. So, and the market was closed here when it came out. So I gave it a day on the 5th, which I think was a Friday, so one day of trading. And then I started calculating this on that weekend. So it gave a day of trading. This is a little bit higher than the buy price that I had in the video, and but it's a little bit lower than where the stock was trading at when the video came out. It's been fluctuating a lot, but 220 is kind of the actual buy price. That's the level below I thought it would be a decent value. Just for a little clarity there. I had a person in the comments who was kind of giving me a hard time about that. And I don't usually repost videos that I already made, but it was kind of a bonus video that I just decided to put out because I hadn't really put out any buy videos on the public YouTube channel for a while. And it was pretty close to my buy price. So I thought maybe people might be interested in that. So you'll see all these stocks are in the S&P 500. But I will say that lately I haven't had very many kind of just like pure vanilla, like easy, like Cigna was an easy one. Elevance was an easy one when I did that back in 2021. Just pretty straight up easy valuation. In some ways, Meta was as well, even though it went through a big kind of decline afterwards before it recovered. The rest of these all have, and Albemarle, it's down 27%, but I basically told everybody in the video that that could definitely happen. So if it gets down under 60, that's when I'm going to consider adding another position. So we're kind of in no man's land right now in terms of it, but it's a deep cyclical, but it's a pretty standard deep cyclical in many ways. So it's kind of behaving normally. But the rest of these have all been kind of, they're just not, it's not straight up valuation. You have to really think about things. Pfizer is coming off the COVID bust, so there was a little bit of that involved. PayPal had kind of bottomed out after a huge, nearly 80% decline, and it really depends on how the business goes, whether they can cut some costs, whether they, there's just a lot of things that it's a little bit of more of a turnaround play than I would normally want to buy. But it did look like the potential was there, and it was pretty cheap, and it did have a decent history and all the things that I would want. But again, not an easy one. Oxy and Devon, and again, I had a comment on the Devon article that said really it wasn't much of an analysis, and it was mostly like portfolio balancing and macro, which is true. So it makes it hard because they aren't at the bottom of a cycle, right? Which is where I would normally try to buy them. They're kind of fairly valued. This is Oxy and Devon for oil. But I didn't have much energy, and if we do have some kind of energy price spike, it can be really good to have some energy in the portfolio to help balance things out. And so that was my primary motivation for buying these. So I could make something up, and I can make up an analysis like a lot of people do. But instead, I'm really sharing what I'm actually thinking. If a person was already overloaded on energy, I don't think they needed to go buy these and add more exposure. But if they were like me and didn't have much, then these are the energy stocks that I think have the most potential upside catalysts compared to downside risk that I could find in the market when I bought them. So again, it's not a standard analysis that where those are coming out. You have to add a little bit more to it. For solar, definitely similar type of situation. That's a structural bet on electricity usage. In some ways, like more modular, portable electricity and renewable electricity, but also it's a play on tariffs and deglobalization and things like that. So, and all those, if it weren't for all those, it might be okay as a stock purchase, but it might not be enough to get me over the edge where I would be willing to take a chance on it, right? And then Norwegian is more of a cyclical play, more of a deep cyclical play, but again, not a super easy one to make because they don't have a super long history. So yeah, I think everything nowadays with the market still pretty close to all-time highs, it's hard to kind of pick through and find things in the S&P 500, which are usually the stocks that I'm making public videos on, that look like super duper attractive to me as a medium to long-term investor. So I've had to do a little bit more work. There's a little bit more edge cases, and these are the kind of the ones that I'm kind of picking and choosing from for various reasons. Now, interestingly, basically they've returned to the same as the S&P 500 as a group. The only Mag 7 stock I have here though is Meta. So I think when you consider that I don't really have any of the giant high flyers in this group from the channel, and it's still performing basically the same as the S&P 500, that's pretty good, especially when you consider Albemarle. We knew it could be kind of volatile, and it's been really the only kind of like truly poor performer. And for a while, it was up, so it's bound going back and forth a lot right now. When you consider that, I think these have done just okay, kind of given what we've had to work with lately. Haven't been chasing any AI stocks or Mag 7, and even without doing that, we've managed to perform the same as S&P 500. So those are my kind of thoughts on what. Now, this can all change if the market sells off a lot. I'm definitely willing to come in and buy a lot of stocks very quickly. I think in March 2020, I bought 30 stocks that month. So it can change, but I have been actively trying to find things when they do come up, and I think I can make a reasonable case for them, or they are interesting, or even though they might be a little of an edge case, if there's some portfolio value I can get there, then kind of share those ideas and come in and buy them myself. But it's really just kind of picking and nibbling here and there, honestly. Now, I have been buying lots of other stocks in the full cyclical investors club service. And I will say mostly I'm buying growth, which isn't a strategy I share on the channel here. I've been finding more things overseas, more growth overseas, in like emerging markets. And I'm still kind of just nibbling, but that's where I see, with the strong dollar, with so much focus on kind of AI, I do think there are some parts of the market where there are some growth that just are kind of a little bit under the radar, and they might not be cheap like a value stock, but if they can grow over the long term and add a little diversification to the portfolio, they might at least produce really good returns over the long term if I'm willing to hold them long enough. So that's where I'm finding most of the growth deals that I've been, hopefully they turn out to be deals, that I've been finding and adding to the portfolio. And then this is kind of how the CIC overall has been doing, including cash. My goal is, if there's nothing crazy going on in the market, like a recession where I can get a bunch of my cash in, or some huge great big winners where I pick the next Netflix or whatever and it does fantastic. Without any of that, if I can get 8% CAGR plus inflation, which is, I think lately probably close to 12-ish% CAGR, that is kind of what I want to make sure I'm above, to make sure that I'm not just being too conservative. So I have about 30, we'll call it 35-ish% cash. So we'll call it like 1/3-ish cash, maybe a little bit more than that. And so that's quite a bit in the market, and this includes cash drag. I didn't used to log my performance on a weekly basis until about 2020. And then you can see that since then I've logged the unaudited approximate performance of the CIC strategies. And then this green line is the 8% CAGR plus inflation over time. So we're well above that. We're a little over a 90% return, I think, right now, since the CIC started on January 12th, 2019. So a little over 5 years. This is about the same as the equal weighted S&P 500, except for we've held a lot of cash during this time. For 2020, we held like 50% cash, and then I got a lot of that invested going into 2021. China, we had some investments in China that didn't work out very well because of the decoupling that we've seen, and the war that started in Ukraine definitely weighed on some of that. And we were a little bit early on some of the growth stocks coming off of the big boom. I avoided most of that big bust, but we started buying a few of them a little bit too soon. So we took a kind of a hit in 2022. And then after making some adjustments, since then we've been able to do pretty well and are well above the 8% CAGR plus inflation goal. So even though I have like a third cash, I think we're still doing just fine. when there is a decline, we tend to decline much less than the market. And then I'm also usually actively buying. It really played out well in 2022 really, and 2023. So, but we see it when you consider that I don't really have a bunch of like AI positions. We were able to rocket off this bottom and keep up pretty closely with the equal weighted index, even while holding a bunch of cash. So it's a pretty balanced all-weather. I consider it like an all-weather approach. And we have enough cash to invest if there's a recession, if there's a crash, if anything like that. And it will also provide a little bit of cushion. Now, most of the things that I have been buying lately have been growth, so they're naturally more volatile. I've also been buying some cyclicals like Albemarle, Norwegian. I have at least one or two more that I bought, and they can be they can fluctuate a lot too. But it's really just picking up things here and there right now, and then having the cash available to buy any kind of big dip, like not the little ones that we've seen, but the bigger ones, because that's where the real money tends to be made. But you have to be patient and just kind of hang in there as long as the rest of your portfolio can do well enough during the good times without taking on any extra risk. So that's what I'm trying to do, and I guess we'll see how that all turns out. So I haven't posted too many videos lately because I've been on vacation with my family. We're trying to visit all the national parks. There's 63 major national parks in the U.S. I started doing this in 2013 or 2014, and we just visited our 50th out of the 63 national parks this week. So we are making progress on that, and hopefully in the next few years, 8 of the ones we have left are in Alaska, so that's going to be one big trip. So we only have 5 that the family hasn't been to that are not in Alaska. So I appreciate everybody sticking around. We passed 3,000 subs on the channel right before I left town, which is fantastic. And I'm going to get back to people's requests. You can see I still have a few up there on the board of individual stocks. And I'm going to get back in the groove here now that I'm back in town and making more videos. And we'll see what the market does. If we get some volatility, maybe we'll be able to find some more buys that are in the S&P 500. So thanks for watching, everybody. Little channel update and performance update here. And I'll see everybody later. Bye.